All right, let's end that conversation. And we're still with Robert this morning. All right, Robert, the question is going to be, should interest rates should be where we draw the line on who's rogue and who's not? And if you cap, then are you sort of saying, well, now you're introducing sanity in this space?
So I look at it from 2 points of view. So basically, if you ask me, what we need first is a code of conduct, because that will help us to define who is rogue and who is not. So it is not related to the interest rate in any way. Then the other thing is that we cannot measure the performance of a marathon using the metrics for a sprint. So if you take an Okoa Jahazi now and pay 10%, you can't start saying that that is annualized rate, because we are not going to borrow every day for 360 days. And actually that accessibility, if you look at the metrics, it is something that really helps people. So maybe you want to make a very important call and it helps you to do something which is much bigger in value compared to the rate that you pay. So I think the metrics and to annual, like if you take the annual rate, like the annual performance rate of that loan, I don't think if it is the right metric, because again, looking at loan interest rates in isolation,
yes,
will actually be a disadvantage to the private sector, because if you are talking about rates of 11% and long-term treasury bonds are at 12 or 13%, as a business person, as the CEO of a bank, why should I take risk on an SME or a corporate at the same rate with treasury bills and bonds, or the treasury bonds? Because treasury bonds, you just sit, relax, and the interest will come. So I think there needs to be different conversations on defining rogue and interest rates. So rogue should be based on code of conduct, because we know that most of the reasons why we are having issues with them are basically on data privacy. So we are not even sure what is done with those data. And it is good that now we have data protection commissioner on board, who can now tell people the guidelines that you are supposed to let users know where this data is going to be used. And if we find any wrongdoing, then this should be the repercussions. Then the interest rates should follow after that. After we set the code of conduct, then we try to see all these things that are about modeling. And from the background of machine learning, it is only easy if you are not the one doing it. But when you start doing it, you realize that you need a lot of parameters. And you have certain parameters where just one thing like COVID can just kill a model and make that business unsustainable. So we really need to look at it. And I see even the central bank, they do stress tests with banks to see what if analysis. So there's a lot of input that needs to be put in place, so that we don't just say that it should be capped at this rate before looking at what the data says. Because again, there are businesses and you look at sustainability. So outside Kenya, you have what is known as buy now, pay later. And if you look at those rates, even in the US and other markets, they usually tend to be high, because they bring in the accessibility point of view, like the way you can be paying for a phone daily.
Yes.
Maybe you can afford 2 Kenyan shillings in a day. But if you are asked to pay 1,000 today, you can't. So it means that you live forever without being able to afford a phone. But if we give you a clever way of being able to afford, given your cash flow, you can. So that's how lending should be looked at, in my point of view.
Pretty much. Gentlemen, let's move on to the last issue that we have for you on the table, where the Nairobi Securities Exchange is eyeing at least one major listing this year. Well, speaking to Metropol TV, NSE Chief Executive Officer Jeff Odundo, I said the boss is working towards attracting a new listing before the end of this year. Odundo further says that the stock market has bounced back since the start of this year, with the bonds also gaining momentum. Fine, that's according to him. Let's look at exactly how the NSE All-Share Index has behaved this year. And you can say, well, indeed, even with the optimism, it has been rising, albeit with lower points recorded as well. George, let's talk to me about how the strongest counters at the NSE have been faring on within the COVID-19 pandemic, and whether 2021 is a good year for them, owing to the fact that, George, if you look at where we were in January all the way to Feb, just 3 counters, and I'm talking about 3 stocks, NSE, BAT, and Safaricom, BAT, and EABL have been the strongest stocks so far at the beginning of this year. Can we say that we are fine when the three of them have been contributing to more than 92% of the wealth at the bourse?
Elijah, remember last year we had a serious lull or a serious plateau.
Yes.
At the Nairobi Stock Exchange. I think between Q2 to Q3 and Q4 last year, we didn't have activity at the stock, a few of the banking counters. But that is explainable given the uncertainties that we had with the COVID season. Come this year, Elijah, I expect to see quite some activity going into Q2 of this year. Remember, most blue chip companies or most of the listed companies are going to start announcing their results at the end of this month. And when they announce their results, you'll see quite some activity at the bourse, especially the banking counters. As you've mentioned, BAT announced quite some significant improvement in their profitability for 2020, and that can explain the activity in that counter. So as we look into results declaration at the end of this month, you realize that most counters will start experiencing quite some activity as they go into the month of April, especially those companies that will declare dividends. Even if they are small dividends, you will see them attracting quite a number of investors to their counters. I'm not sure what Jeff Odundo's strategy is in attracting a new listing this year. Remember, the last time we had a listing was sometimes back. When I talk about the IPOs, that is when we listed Cooperative Bank, when they listed the likes of Equity, when they listed the likes of Kengen. It's quite some years back. We've not seen a serious listing in the last 1 or 2 years. So I'm not sure his strategy in attracting a serious listing in the market in this year. I know NSE has their Ibuka program that is trying to attract some SMEs to be listed at the stock exchange. I'm not sure if that is the direction that Jeff Odundo is looking into. But that notwithstanding, I think it is a good thing to start looking at rejuvenating or just restarting the wheels at the NSE and attracting at least some IPO listings or some bond trading at the market. Remember, the bonds market had a problem when Chase Bank went under, when Imperial Bank also went under. Companies that had floated bonds just a few years before they went down. So those are areas that I think NSE should look into before they attract investors into equities listing and even into the bonds market. They need to have their strategy well put out so that investors coming in are sure that they can recoup their investments back as and when they need it, Elijah.
Pretty much. Robert, clear this conversation for us. Well, Jeff Odundo is saying things are looking good. 2021 is likely to be a good year for our local bourse. Share the same sentiments, and what is your reaction to just 3 stocks accounting for 92% of the trade volumes we have witnessed this year?
Thank you, Elijah. So basically what we need to look at is the year that he had in 2020. And Warren Buffett, the richest investor in the world, he said that it is only when the tides come when we know who has been swimming naked. So basically he meant that when things are tough, resilient companies come out strongly. So basically that is the statement that we've seen. Of course, banks are disadvantaged because anything that affects the economy puts a negative sentiment on the banking sector, so we'll forgive them in this case. But Safaricom, of course, you know that they're almost recession-proof because people always make call, and during times like lockdown, people want to be still social and connect with each other, so mobile data is there, content consumption. People are doing live shows online, so that even saw the growth of home internet for them. And of course, BAT, they looked inwards and changed their strategy in the second half of the year. If you look at their first half, it wasn't good. But with the opening up of the country and the lifting of movement restrictions, that was a plus for them with their supply chain and distribution. So that helped them. And then EABL also started peaking slightly because of reopening of bars, though not 100%, but that has been helping them. So if you look at that point of view, we've seen that the most resilient and the best placed companies at this time, they're doing well. So that can explain the reason why the volumes are going up. And also, we need to look at the fact that there's an index that tracks emerging market shares in the US. So that index, we had Cooperative Bank was added into it, Safaricom, BAT as well. So that simply means that if you're a foreigner and you're coming into Kenya, you don't know Home Africa or any other company. What would you do? You go with the one that has been kind of endorsed in your country in the New York stock market. So for that reason, you'll see that there have been inflows into Safaricom, a lot of it, to the extent that people are saying, how comes we contribute 100% of Safaricom revenues, but we are only holding 3% in terms of shareholding? So there have been a lot of debates just to challenge locals to be shareholders. And BAT and COP as well, they've seen a lot of volumes going into that direction. So looking at it again objectively, we have slightly over 18 companies that have issued profit warning. So what they've told us is that as investors, as Elijah and George, please manage your expectations. We don't expect this year to be very good. That is 2020. And there's also that element of reduction of corporation tax by 5%. So that might give us good results, or it might help the results to be slightly better were we to use a different rate. So it means that 2021, that element of 5% boost won't be there. So it will go back to 30%. So still 2021, as investors, we still need to manage our expectations, but to expect revenues to be up. So the bottom line will be a matter of that tax element, and some companies are doing cost rationalization like Britam, so that might affect the numbers. But we still have very resilient companies. Companies like Jubilee, they have retained earnings of over 26 billion Kenya shillings. So you can't compare them with smaller companies. So then they'll be stronger during this period of time. So what I think is that this year will be positive in terms of revenues, but we still need to manage our expectations and follow the advice that those who run these companies have shared, that they think the results will be slightly lower. Then in terms of dividends, we have traditional dividend-paying companies like Stanchart, Cooperative Bank, but then there's a reality in that the central bank governor says that if you're a bank, for you to issue dividend this year, you'll have to consult us. So again, obviously, that is a consideration that might mean that it is not going to be all rosy in terms of dividends, because the central banks, after the 2008 financial crisis, they are very keen on capitalization of bank, like being resilient first, so that at least you can just decide to do nothing in these 2 years, be resilient, then you'll have an opportunity to still run your business in 2022 maybe, rather than giving out dividends, then you run out of capital.
Pretty much.
So I think
Robert, pretty much, I'm afraid that's all the time that we have for you this morning. Quite unfortunate, but guess what? We'll call you back so we can actually table a conversation on exactly how our market outlook is for 2021. Unfortunately, we have to come to the end of the conversation this morning so we can allow time for the rest of the brokers as well. Thank you very much. You've been quite invaluable, George and Robert. We take a short break. Once we come back, our sector trends this morning.